Good morning, everyone. This is Louise Lovewell of the Lovewell team with Katie Lovewell, and we are honored today to have wonderful Bill Jarvis, our loan person, who's going to tell us all about the interest rate and what he sees in his magic crystal ball for this summer. Take it away, Mr. Bill.
All right. Well, thank you, Louise. I don't know how magic my crystal ball is, but I'll give it a shot. So right now, rates, I think, are a little bit higher than last time we spoke. We're probably just under 7%, like 6.875 for a conventional loan. FHA rates are also up a little bit. We're probably like 6.5, 6 and 5/8. And that's actually up a little bit more. For whatever reason, those have gone up a bit more. On the horizon, I think we're going to see probably a Fed cut. See if that helps the mortgage rates. There's a better than 50-50 shot. The Fed will cut the rates in June. If they don't, actually, the rates will probably go up. But as long as we get that cut, I think they'll ease down a little bit. There's been a little bit lower inflation over the last couple months, which hopefully helps them make that decision and helps mortgage rates come down in general. I don't think there's going to be any as big of moves in the near future as we were hoping for. Over the last year, rates have never gotten below 6%. Never really even got to 6%. They're like 6 1/8 was the lowest, and that was like 4 days. And a couple times they've gone over 7, but they haven't gone above like 7 1/4. So we're still right in where we've been. And I think we'll probably stay above 6, certainly, through at least close to the end of the year. So if people are waiting for some huge rate reductions, it's probably no time soon. Like I said, the inflation is coming down. The new thing we're getting a lot of new mortgage programs, somewhat similar to the ones we had before, back, more stated income, things like that. The big difference now is they're mostly for self-employed borrowers, and they do look at cash flow, and these loans do require a much more significant down payment than the kind of stated income loans that we were doing in 2006, 7, and 8 that a lot of people think was what led to some of the crash or some of the huge run up in value. These people, if you have a large down payment and you're self-employed and you have cash flow, you can get a really good loan right now. So, a couple of years ago, those people would have to get basically a hard money loan with really not attractive rates. And now some of these programs, the rates are actually just as good as a conventional loan. So that's something to look at. If you have a good cash flow in your business, even if you're not on your taxes showing a big income, you can probably get a pretty good sized loan if you have a significant down payment and you have good credit. So those loans are definitely coming back. There's also a lot more options than there have been in the last few years for second mortgages, excuse me, with which much more attractive rates than we'd had in the last 3 or 4 years.
How about question? This whole tariff thing, is that like making some buyers a little crazy, or like, I don't know.
Well, I mean, I probably a little bit of tariffs. A lot of it was this when the stock market went down as much as it did. People who were planning on taking large sums of money for their down payment, that certainly affected them. Most of those losses are back now, so we're the majority of the money people lost hopefully is back in their portfolio now. So if they're going to be taking money out, it should be mostly, certainly stock dependent, but most of it's back. So that is probably helpful. I mean, some of those people might not be super ready to use that money, thinking like, hey, I still got some more to come back, and maybe that will, because this whole thing is so fluid with different countries with different tariffs still, and we're in a 90-day pause maybe with China, maybe it's permanent. I don't really, no one really knows. So, but you know, most of the losses are back. So hopefully people have most of their money back.
And the thing, and Katie's going to show us, but the thing that we were talking about before the meeting is the inventory is up in so many cities. It seemed to me like buyers have choices. Some buyers have choices. I mean, right now we have listings, but I think we're gonna have to prepare the seller. Don't expect a lot. I mean, if we can, if we can make all the check boxes check, maybe we'll be lucky. Like, I mean, we had one in San Leandro that we priced it pretty well, and we had like, what do we have, 7 offers, Katie? 7 or 8?
Yeah.
But I think those days are not so much anymore. Our last one, the one that you held open, we had 2, which definitely went above the asking, which I think was really good. But every day I'm watching the inventory and I'm going, it doesn't seem to be decreasing too much. So
No.
maybe I
Well,
should.
and what I'm seeing is, I mean, the last few buyers I've had that got a house pretty, this last month, they were houses that just came on the market. They were priced aggressively. They were both very nice, and they still have multiple offers, but it wasn't like, if these houses were on the market a month ago, they might have had 50 offers. I don't know, but they still were getting multiple offers, but it wasn't as crazy as it was, in the recent past.
All right.
But there is stuff sitting. So yeah, if your house isn't selling, probably isn't
It's
priced right.
all about the price and the inventory.
Yeah.
Yes, for sure.
All right, Katie, take it away.
All right. Well, thank you, Bill.
Thank you.
See you next time.
Bye.
Bye, Mr. Bill.
All right. I am going to go ahead and share my screen so you can see what is going on in the market. So we'll start in the southern part of Alameda County. And again, there's 3 cities that definitely had a huge increase. The first one in terms of inventory is Fremont. So when you look at Fremont's numbers, all of last year in terms of active, there was the highest at any time last year was 83 actives. Oh, I apologize. 83 actives at the end of last year. This year, last month, we got up to 90, and now at the end of April, we're at 115. And when you look at, okay, is demand keeping up? Because, typically the spring, a lot more people sell houses, a lot more buyers buy. Like they go hand in hand. But we just see, as Bill was saying, as we've noticed with buyers, with everything going on in the economy, I mean, we've had a deal fall apart because people just feel unsure about what is happening, and they're not sure if this is a good time to buy a house or if they should wait. So there's just the demand is not keeping up. We can see in Fremont, it went from 61 pending to 63, so up 2 versus 25 for active. So it's, for those people who are looking, it seems like now is a good time in certain cities to be looking for homes because there's a lot of options and it doesn't seem like there's a lot of competition. So this is Fremont. Hayward, again, a big increase in inventory, went from 84 active last month to 118, and pending only went up from 40 to 48. And you can already see a change in prices coming down to reflect that, which I think for a lot of these cities, when we see a big increase in inventory and not the big increase in demand, I expect price to go down. All right, San Leandro, interestingly enough, the prices are still going up. Didn't have an explosion with the inventory. Definitely has gone up from 40 to 55. But pending weren't too far behind. They went from 21 to 31. So it's interesting, different cities. And I would definitely check on, for those buyers and those sellers, pay attention to what's going on in your city to kind of guide you for what you should be doing. All right, Castro Valley, also decent increase, went from 32 actives at the end of March to 51, which it was higher last year in September at 56, but still pretty high because pendings didn't increase at all in terms of numbers. So I do expect prices are going to come down a bit, or at least flatten in Castro Valley. Alameda, you can already see prices coming down. Inventory, actually inventory and pending went up slightly more than inventory, so we could see a shift the other way. Oakland also, interestingly enough, did not compared to their peak in inventory was last year at 637. They're currently at 490, which is definitely, jump going up, but so with their pending. So they also do not seem to be following this trend of a ton of houses sitting on the, coming on the market and kind of sitting. All right. Berkeley, again, big increase from 73 active at the end of March to 108, which was also compared to last year, far greater. There was nothing above 80 last year. So, and their pendings actually went down. So I would definitely be looking very closely at houses if you're looking in Berkeley. Seems like could be some options for you. Lafayette increased from 32 active at the end of March to 49 at the end of April. Pendings went up slightly, but not, again, keeping up with the demand or the number of supply. So we do see prices coming down and probably continue for a little bit. Pleasanton, again, went from 82 at the actives at the end of March to 106 at the end of April, which again is higher than any time it was last year. Pendings went down. So definitely, again, if you're looking in these cities in which we see, you have some options for buyers. And lastly, Livermore went from 77 actives at the end of March to 117, and pendings went down one. So by like sellers, if you're in these cities, you have a ton of competition. So, you either need to be priced, well, most likely you might have to be dropping your price because unless again, you have all the things that buyers are looking for, remodeled, there's very few buyers who want to take on projects. So, if you have old electrical, old plumbing, old roof, all that stuff, that is going to, when they're looking at their competition, you're going to go down in their eyes. So got to be very cognizant of how you stand up, not just in like, the small things, it's everything. Buyers want move-in ready. They want houses that are fully updated, because it's very few buyers that are willing to take on projects. It's fewer and far between these days. So anyways, now of course things can shift. It seems like the economy might be getting better with the pause on tariffs, and we'll see what happens next month. Is definitely a very, interesting spring market. But yeah, and again, it's not every city, but there are a lot of cities in which inventory has really gone up. So it's a little bit, rougher time for those sellers in those cities, and even though it's typically not in spring, but for buyers who are still looking, and it seems like you have some opportunities right now. Anything you want to add?
I would say so. In fact, I listened to the legal meeting with Shannon Jones, the attorney, and she said, this is definitely a healthy market because buyers and sellers, in other words, there can be some negotiating and there's, we always do inspections up front, but I'm going, it definitely makes for buyers to have a chance where for some years they had to be very competitive, non-contingent, 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 and it was tricky. And now they have some opportunity. So
Right, we are seeing more of our listings, that winning offer is having a buyer has, one, two, or all three of their contingencies. So yeah.
well, I think it's good. I mean, I think it's good. The interest rates are not that crazy. I mean, 6.5, 6.75, 6.75 is okay. I mean, we definitely see buyers that are seeming willing to do it. So I'm going, it's good. I'd say it's a good time. So I'd say we've started spring, and before we know it, summer will be here, and graduations and all that stuff, Memorial Day weekend, everything's coming up. So it's like, anyway, I would say I think it's good. So that's my story. So I
All
think
right.
that's it. So I guess until next month, happy May, happy everything. Congratulations to all of you who are having children or grandchildren that are graduating from whatever, from pre-K all the way up to college. It's like happy. Have a wonderful day and a wonderful week until June. See you, everybody.
Bye, everyone.